Hello accounts people, time to have a look at a consolidated statement of profit or loss. Apologies to anybody who had a look at the previous version. A technical hitch meant you could hear me clicking, you could hear me talking, but you couldn't see any video rolling. We have here an example from one of the main publishers. J acquired 90% of the issued share capital, 90% of the net assets of Silent Bob. That means 10% of the subsidiary is still owned by somebody else called the non-controlling interest. Comprehensive statement of profit or loss for J because he's got the dividend. Silent Bob's profit or loss here. It's that sitting there that tells us it hasn't yet been consolidated. So the main adjustment on a profit or loss when we consolidate it will be intercompany transactions. So in this case the subsidiary has sold goods that cost them 80,000 at a big profit margin onto the parent company for 480,000. However, a quarter of them, 25%, are still sitting on the shelves. That is what causes the unrealised profits issue. We can't claim that profits until it's been sold outside the group. On with the workings out then. Revenue first. So the revenue, this is J's revenue. This is Silent Bob's revenue. Take off the intercompany transaction because we sold to ourselves, but we can't sell to ourselves. It's not revenue under the definition IAS 18 for revenue. So 199,320. Cost of sales next. So back to the workings out. Starts off similar process. J's, add to it Silent Bob's. If it's not sold, it's not part of the cost of sales. But now we need our unrealised profits. So this is the items that haven't been sold outside the group. We can't claim the profit yet. So different ways of working this out. There's also a separate video on this. So had we sold these goods completely, we would have made a profit of 400. But 25% aren't. So our unrealised profit is the 25% that hasn't been sold. This is exactly the same as the adjustment to closing inventory. So closing inventory wise, we've got these items at the moment valued at 120,000, a quarter of the 480,000. However, from a group perspective, they should be valued at 20,000, 25% of 80,000. 100,000 minus 20,000 is the 100,000, the same number. It's an adjustment to closing inventory, which is part of cost of sales. Closing inventory is a minus. We're reducing closing inventory, so we're effectively minusing a minus, which is why it comes in as a positive. Most students remember, subtract the big number, add the small number. So that works out at 137,920. So minus 137. There we are. That gives us our gross profit figure. 61,400. This doesn't count. We can't give ourselves a dividend. It's there to try and catch you out or make you think. Then we can take off these. Unlikely to see these adjusted. They're both negatives because we've taken both off. So that's J's, and take off Silent Bob's, giving ourselves a profit before tax 45,900. They're taxed as separate entities, so unless told otherwise, assume there's no adjustment needed. The 3,000 would have been calculated on Silent Bob's after the unrealised profits taken into consideration. So we have a profit for the year, some of which belongs to the parent company and a little bit of which belongs to the people that still own the 10% of Silent Bob. So work that one out first. They get 10% of Silent Bob's 15,000, but they have to take their fair share of the hit of unrealised profits, just as they would make a gain on a revaluation or a loss on impairment of non-current assets. So 10% of 100 is 10, which reduces their share of the profits. It is, of course, Silent Bob's profits that's hit. This adjustment wouldn't happen if it was parent selling to subsidiary, where the unrealised profits would be all shown by the parent company. But that means they get 1490, so the 1500 minus their share of the unrealised profits. And if we can work out their share, the easiest thing to do, especially under exam conditions, is to say the parents get whatever left over, as all parents know that. Here we are, balance it off, just to double check. So we've seen them get that amount of the profits, the people that own the 10% of Silent Bob, and the shareholders of the parent company get their entitlement, whatever's left.